Good afternoon. Welcome to OptionsTenders, the weekend edition. And happy, what do you call it? May the fourth be with you. So we're doing this on May 4th, 2025 on Sunday night. Had a great hockey tournament for the boys here this weekend. So just getting this out to you. Sorry so late. So let's really just jump into it. We're going to go through SPX on the monthly, and the other indices as well. And on the weekly, we're going to take a look at those. We've got a big week ahead of us. FOMC, the options expected move is plus or minus 154 points. So it actually went up as price is going. So expect some volatility. We're really going to focus on this kiss of death. I know that we just talked about it on the Friday's video, or Thursday is when I gave you all the examples of the former recessions. So that's a really good video to look at. Okay, we went back through them and saw how the wave 2 or B could get started, and went through all of these as well. So make sure you check that out. I'll post it up above at about the 130 mark. And again, how we're playing this, we're using a lot of in-out spreads. So I'll put that video on just a little bit later up top there. But is this the end of the road, or are we going to make new highs? That's what we're trying to answer. I believe the highs are in. We rejected off of the historic trend lines. And I think it's a very likely situation that we're about to end and reverse this move. Now, there's two things that could happen if that is the truth, and we could test the lows and we can continue to correct, or we can go directly down from here. So that's what we're going to go through. All right, we have SPX on the monthly time frame all the way back to 1929. We had our crash here connected with 2000 and 2025. So we're back there. And also in confluence with that, we have 2008, we have 2021, and we're looking at 2025 again. That is not a coincidence. Okay, although we had a huge monthly reversal candle, this candle could easily fail. It's happened before. You get reversals and they fail. Okay, so don't just think that this is a bullish, reversal candle and we can continue to go higher up to 7,000, 8,000 or more. I don't think that's the case. I think we rejected off of a very historic spot. We had a huge breakdown, and what I just showed in the members video for the options expected move and the cycles today, it's $4.99 a month. That's all. What I showed was what we studied, more like it, was this expanded leading diagonal. It looks like a three-wave move, okay? It's very, very, I guess, deceitful. It looks like a three-wave move, but really it's not, okay? And I know that there's some YouTubers and analysts that are saying that this is a three-wave move and we have to make new highs. Just be cautious. Okay, moving averages. We're up against that 8 EMA on the monthly time frame. Okay, we're bumping up against it. We hit it once and we're at it again. So let's be careful of that. So far we're holding the trend, but right now I suspect we're pinching right between the 8 and the 20. That could be a sign right there that the momentum has ended and it could start to reverse. So we'll keep an eye on that on the monthly time frame. Our DMARC, there's probably not going to be anything here, but we're going to continually follow to see what kind of setup we get. Okay, it's going to take a second. 1, 2, 3. So we're still on this count to the downside, and the reason is one of the rules is that the count continues unless you go close 4 bars previous. Okay, that's not going to happen without getting new highs. So let's continue to watch this count to the downside. Very good. That leaves a long way to go to get to a 9 count. All right, we'll look at those in a little bit. Let's look at SPY. Volume profile. Again, we just missed. So we had unfinished business here. So that said, on this time frame, we could still get an expanded flat and correct a little bit higher. This could go sideways for a little bit. All right. I'm going to consider that the alternate scenario there. And don't get me wrong, I don't mean alternate like primary. I know this one's going to happen, but if it doesn't, it just keep in mind that there's multiple scenarios that can always play out. So you have to react to it. So if we think this could be expanded flat, we haven't gotten to this, let me turn off the profile. We haven't gotten back to this support area, these consolidations. We actually just may have tagged or just missed up here. So that leaves me to believe, we could still get down to this point and have a nice reaction off of there. It doesn't mean that we have to do a full flat pattern, no, but we're gonna get a reaction off of it. Okay, so this wick tells me that we just made it here, even though we spiked below it and held for now. Let's go over to Qs. Oh, moving averages. No. OptionsTender, that's what I want to show. Okay, so what makes us think that this is done? Well, not only that wave count that we studied in the members video, but we also have a bearish crossover here, and I need to put that in for SPY. I know I have it in on QQ or SPX already. Okay, so we had the bearish cross. You see the histogram starting to grow. We did get a bounce. We're not oversold. Price can go much, much lower. If this is a beginning of a bear market, this move can continue to grind down and get bounces and bounces. Such a higher time frame that this could easily continue to go down. Okay, so we're weak. The RSI is weak. It's back to about neutral. So it just, again, plenty of room to the downside. Slow Stoke broke down off a divergence. I think this is going to continue. That's a really good indicator that this move is over. For whatever reason, if price did go higher and retest those historic trend lines to the upside, that would just create a monthly negative divergence. So keep that in mind. We would have another objective short at that point. Okay, so Qs, same thing. Boom. Fighting with the 8 EMA. Let's see what just got a, bearish crossover. Same thing to look at. I'm not going to go through all of them like that, just the moving averages. IWM. Even more bearish. Fighting with the 50-month, the 20-month, and the 8. So the trend is down. Momentum is down. We lost the 50. Let's see where this ends up. Okay, SMH, same thing. We're underneath the 8 and the 20 moving average. So far, trend is down. Momentum is down on the monthly time frame. That's huge. Price needs to get back above for this to happen. And just back testing right here and squeezing a little bit more like SPY, squeezing in, pinching in between the 8 EMA and the 20. So no resolution there yet, but it's underneath. So the 8 and the momentum is ending. Let's see if the trend breaks down. So far holding up with the wick. All right, VIX. VIX is in a positive stance. Okay, we had that breakout at that consolidation area here. Had the breakout, although a huge wick, we're still holding above all the moving averages. And we're just about to back test that breakout zone. Huge to look at. This, I think this is happening soon. That's what I'm getting at. Let's go back to Let's go SPX. Weekly time frame. There's our unfinished business with the 200. We have the trend line. If this wants to just tag right underneath, let's say we get our reversal from here, get an expanded flat, and then head up for a little bit higher move here. That doesn't have to happen because the 20 moving average is starting to move down anyway. But I showed in that video called The Kiss of Death where you got your flat pattern. It didn't make an expanded flat, but made a test of the lows and then ground up above the 20 moving average and couldn't hold and then dropped. And so that could be our flat pattern. So that's not out of the question, but here, this is the focus. I think this move is just about over. SPY, just a little different look. Okay, so broke back into this megaphone area. We were looking at that. We didn't know if we'd reverse off of this trend line here. Back over it. Over the 8 EMA, now we're tagging the 50-week moving average. Also, you have the 20, which is the most important trend or moving average for us right now. This is the kiss of death. If we tag that 20-week moving average, which we don't have to on the reversal here, but at some point we're going to test it, especially as we're in a downtrend. If we break down from here, we still could tag this bounce zone, and we could get a bounce from there. So here's what I'm thinking. If this is a wave 1 into a wave 2, and this is complete, you're still going to go test the lows, maybe even tag underneath, and you're still going to get a 1, 2. You still need to start a lower degree, 1, 2, 3, 4, 5 for a 5-wave move lower. So this is still going to be an important area no matter what. All right, keep that in mind. Got the moving averages. What's our DMARC? We got that 9 count exhaustion. We had our move here. Let's see what happens. We got it in 1 count here. I don't think that's going to hold, but let's keep an eye on it. So that exhaustion up here for the sell should have been our first clue that this was going to continue to the upside for a bigger correction. But we do have confirmation now. Unfortunately, it's the move is just about over, and this was very, very difficult because of this expanded leading diagonal that we talked about. It was very, very tough. They're not common, and so I was unable to identify it when we had this little bounce here. I thought we were going to have a larger bounce and continue with a 5-wave move. This ended up being a wave 4. And the price failed, and I missed most of that move there. Okay, indicators. So the MACD, yes, it's in negative territory. Yes, it has not crossed the bull side, even though we did on the daily time frame. This is still a negative chart, and we're testing back those moving averages that are starting to curl down. This can go much, much lower. It also can, go lower while creating positive divergence and such. So keep that in mind. What did it look like in 2000 and 2008? This can go much lower. You can go low, lower, all these lows here, and then still continue to go with positive divergence. Okay, so don't think this can't go any lower. So broke down from this move here and oversold. We got that bounce. We have somewhat of a downtrend line here, so we have to keep that in mind. And we're at that resistance. So we have some tailwind to the upside here with a slow stochastic, but that also could create here a downtrend line. So this was negative divergence, and we're still in the downtrend. So maybe this curls over right now. All right, in the volume profile, again, here's the beginning of the shelf here where I have that zone. So that, a lot of volume traded in here. We will eventually get into that zone. All right, let's leave those on, the moving averages, QQQ. With the Qs, already tagging that 50-week moving average. The 20 is just a stone's throw away. It's right there. Do we reverse now? We have FOMC on Wednesday. Can we get a doji candle here next week? Sure. Do we tag that? This is an old trend line from 2000. All this is happening. We're in the zone. Auto zone. SMH. Again, not quite there yet, but you got the 20 moving average right below. Here's a look. IWM fighting with the 200-week moving average. Just really, really negative. So we were looking at this. Now that we're above this is no longer a possible wave 4 in my mind, is less probable. Let's say it like that, because it extended past the 40%, the 382. So in my mind, this move is done, this wave 1. So this could give us a little bit of a example of it needs a larger correction. Does it have to? No. But if this correction gets more complex and is maybe a flat pattern, or just needs to, or maybe this continues to be a sharper move to the upside and test higher, maybe S&P and tech, they can form flat patterns while this needs to resolve a deeper correction. So just keep that in mind. I'm not saying what's going to happen. We just have to keep that in mind. Could it be done right here? Absolutely. And it could continue lower. All right, there's our back test. I didn't change these. So this got to the zone. We're back testing here. We're at that 50 moving average. Let me change IWM so we can look. And don't forget, play this at 1.25 speeds. I know sometimes I go back and forth. Look at that. This is a pretty chart. If we break down from 170, see ya. Let me give you a better look at these. Here's another look. Nothing to update there. Could have a little bit more room to the upside, just like NVIDIA as well. All right, the VIX. And coming into, there's that boxed in area that we broke out from. So coming into that zone, right aligned, no coincidence, huh? Right there with the 20-week moving average. That would be the inverse look here, the kiss of death. I think we get there. There's on the 65-minute, there's a gap that closes right about that same area. So close the gap and then hold support here for the breakout test. This is great. I love looking at the higher time frames. It really keeps us in check. Okay, and we're going to go back to SPX. Let's go ahead and go to the daily time frame and kind of sum this up. No pun intended with the summation index. Okay, so on the daily time frame, we're in that zone. This is our zone. Even with FOMC, and we could still get some sort of pop up here that doesn't make sense, and we could still make it to the 786. And then we have great resistance, support. That would be the top of the zone. Again, there's no coincidence why that's also the top of the options expected move, and I'll show you that in just a second. We're getting to the 200 moving average, the 20 weeks just above it. All right, and then the McClellan summation index will go to. Now, this looks like it's starting to break out, right? We have lower highs. That's not an actual trend line, but we're showing this move is likely to be done. All right, we didn't get to that extreme bear, but now all that tells me, in my interpretation, I think I need to show you. For example, we started this channel here. We didn't even break down from all-time highs until we made it into this. Remember, this is a breadth indicator until breadth really got bad here, and that was our high. That was our all-time high. Then we back tested into that neutral zone. We did make it into the extreme overbought or oversold territory, and then we had a huge move. So we're getting that huge move right now, even though we didn't get extreme. So what does that mean? We have plenty of room to head lower. All right, a lot more room than this had on its initial move. Okay, so this is allowing us, look, with this massive move to the downside, we didn't even make it into extreme bear territory. If we continue in a wave 3 here, we have lots and lots of room to get down lower and then make a wave 4 that could, bring breadth back up, and then 5 back in here, probably a positive divergence. So if we're looking for a 5-wave move, the big question is wave 2 going to be a larger correction, or are we just going to head straight down for wave 3 at this point? All right, but right here and right now, we're only in the neutral zone. We still have plenty of room left in this bull bear pivot. At 1600 is where I marked it. That it seems to be the perfect spot that price came to here in the breadth indicator. And so the gray zone, we're just now getting there. All right, so maybe we have a little bit of room to the upside, and then we come back down for a much bigger degree wave to the downside. All right, and just to wrap this up, we have the options expected move for the week. All right, and so that's 154 points to the upside or to the downside. And right now it's a little bit biased to the upside, obviously because of the trend in the daily time frame, but we're right at resistance. So this is not a time to get bullish. If you haven't gotten in this is not the time. All right, and I didn't mention, but the structure here, we're still positive but cautious. I know that's been on there for a long time, but we're just getting done with wave 1 and into wave 2. So we need to break this low even to consider this a negative structure. We still do not have a lower high yet and a lower low. All right, so we're just getting this started. We're still looking out to June of 2026, around that zone. Give a month or two for a low. Okay, that's our time frame. And so we have much more to go, in my opinion. Now, this is wave C. So we're in primary wave 2 here, looking for a lower high. And this is the C wave. We have A, B, and C. That could develop to be a larger one, but I still think we're testing the lows no matter what. And if you're bullish, this is probably somewhere a 1, 2. And we went through this on the lower time frames. This is not the first time. So if you go to Friday's video or even before, we have 1, 2, 3, and wave 4 was a flat pattern here. And we're in 5 of possible wave 1. So we hold those lows, and then you have a bullish pattern that for the bulls, that we make new highs where wave 3 keeps going, and we make brand new all-time highs. Okay, that's not the bottom end, but we'll have those levels pointed out in our further videos. So make sure you hit that notification bell to see when we can consider this a really repaired market and it's starting to get more bullish. Okay. All right, that's what we got for you. Thanks for joining us here at OptionsTender. Don't forget to like and subscribe to the videos. Thank you for all the support. Join us in the Discord. It's 99 cents a month to become that YouTube member.